Hi there. My name is Mark S. Brantley, and I welcome you back to Boardroom Minutes. Boardroom Minutes is your premier channel for clear, concise insights into the issues that shape today's boardrooms at for profit corporations, nonprofit organizations, and religious institutions like churches. And today we're going to be tackling one of the biggest questions facing every credit union board. And that's, how do we grow while staying true to our mission of serving members? Now, this episode, although it is primarily focused on credit unions, is nevertheless applicable to any other type of organization, because whether you have members or you have customers or you have those in the communities that you serve, if you're a nonprofit organization, this is nevertheless applicable because you want your organization to grow, but at the same time, you want your organization to be true to its mission of serving the stakeholders that are part of your organization. So, the board's role in credit union growth, and it's not what you think. But before we actually take a dive into that topic, why don't you hit the like button? And if you're not yet a subscriber, why don't you click on the subscribe button as well? So, we asked the question, how do we grow while staying true to our mission of serving members? Well, growth isn't just about getting bigger. It's not about just getting larger. It's not about just increasing billions in assets, but it's also about creating member value. It's about serving your members. It's about serving your stakeholders. So, in this episode, we're going to explore how boards of credit unions drive growth. And that's by focusing on three essentials. The first being vision, and that is the board setting direction. The other is oversight, and that's managing risk and opportunity, making sure there is accountability. And then third, we're going to look at member value, and that's keeping people, not profits, at the center of the mission of the organization. So, why growth matters and what does it really mean? Well, in credit unions, growth isn't about chasing profits. And that's why credit unions have a not for profit status. Why? Because profits is not the primary goal, but it's rather about serving the members that are really the owners of the cooperative. It's about impact, and it's also about sustainability. The credit union philosophy is people helping people. And also, the credit union motto is not for profit, not for charity, but for service. And that service is to the members that are the owners of the credit union. When your credit union grows, what does it do? Well, it expands member access to affordable financial services. It also attracts new members who need community based banking. And then it also strengthens long term stability through economies of scale. But here's the catch: growth for its own sake can destroy member value. And that's why there must be a balance between achieving growth, but at the same time, achieving member value. And the best credit union boards that have that balance in place, their focus is on purposeful growth, not just growth alone, but growth with a specific and particular purpose. And that's growth that strengthens service to the members and not just the size of the corpus or the corporation, the credit union. An example of that is, well, a credit union that grows deposits faster than loans may look successful until it realizes members can't access affordable credit. Because one of the things that a credit union does in serving its members is to making sure the loan products that it offers are affordable, that interest rates are low. So growth must always connect back to the members' benefit. Let's look at the board's role in driving growth. Well, how do boards drive growth? They don't actually take part in the day to day operations. So, how do they impact growth? They don't sell loans, they don't open new branches, but rather they create the conditions where those things can happen. And we talked about setting direction, having vision. Well, let's break it down into the three key roles. One, set a clear member centered vision. In other words, the board defines what growth means for the credit union. And the board must ask, well, who are we here to serve? And how are their needs changing? Because member needs change from time to time. They're not static, they're actually dynamic. Also, for the board, what is our 3 to 5 year vision for the financial institution? And that's where strategic planning comes into play. How do we measure success beyond numbers? Are our members satisfied? Is there community impact? Because numbers by themselves can tell you about growth, but they don't tell you about the value you are bringing to your members, or if you're not a credit union, to your stakeholders. So, vision driven boards don't just chase numbers and they don't chase trends, but they rather set direction in mission. Number two, boards should provide strategic oversight. And we mentioned that boards must balance opportunity with risk. And the questions that boards should ask themselves are: new growth plans realistic? How would they affect liquidity, capital, or regulatory ratios? For instance, if you're growing your loan portfolio, do you have enough liquidity on hand and in your vaults in order to meet member demand at any particular time? You need those reserves, you need that cushion. So it's not just about growth, but it's also meeting member demand. Are we innovating responsibly with technology, or are we overreaching? Are we employing AI properly? Is AI causing us to grow without really caring about our member demographic? Are we denying loans based on discrimination? AI can do that. That's why we have to be able to not just employ technology to achieve growth, but how does the technology impact our membership? Therefore, the board's oversight ensures that growth doesn't outpace governance. Never surrender your governance as a board to achieve growth. For example, a board that approves rapid branch expansion without capital planning isn't leading. You must have a plans in place to make sure there's adequate capital so that when you do expand your branches, you still have enough liquidity for member demand. You don't want to gamble. Gambling is for Las Vegas casinos. Oversight keeps growth safe, and not just safe, but it keeps growth sustainable. Number three, boards need to protect and promote member value, because at the heart of every decision should be one simple question: does this improve members' lives? That's the $64,000 question. That is the mission driven question. That is the purposeful question. Does it improve members' lives? Will members benefit by implementing a particular project or policy? Because boards drive member value when they do what? Well, approve fair pricing. We talked about affordable products like loans, interest rates being low, and also they're transparent about the fees. There's no small print. Every member should know exactly what it is that they are agreeing to. Then boards need to encourage innovation that saves members time or money. Again, we're talking about member benefit, member value. Also, there must be uh, part of board driven purpose promoting financial education and inclusion programs. An informed member is the best member, an educated member, and we're talking about financial literacy, is the best member. Why? Because when members thrive, then the credit union thrives. So growth without value is really an empty proposition, but value driven growth builds lifelong loyalty. Let's go to part three and let's look at the growth equation. Well, credit union success comes down to a simple formula, and that's vision plus oversight plus member value equals sustainable growth. So when boards align these three propositions, the credit union grows in the right way for the right reason. And let's be honest, many boards talk about growth, but few define it clearly. That's why you'll see a credit union with about 50,000 members and shrinking engagement, while another with half that size is thriving and meeting member demand, meeting member value, because it focuses on what? Relationship growth and not just account growth. So, growth is not measured by numbers alone, as I mentioned earlier. It's measured by the value you create for your members. And that's why it's important for boards to have vision plus oversight plus member value to equal sustainable growth. Four, what boards should do next? Well, here's what smart credit union boards can do right now to lead for growth and member value. And A, revisit the strategic plan. Is the plan aligned with member needs? Or is it just to grow the credit union? Or is it just following market trends? Remember, it's about the member and the member benefit. Then it is what you measure is what matters. You have to measure whether or not your plan is going in the right direction. Is it reaping benefits for the members? Is it reaping benefits for the organization? So, therefore, the board needs to make sure that there are metrics in place that measure member impact and not just the numbers. It should also measure member retention because you don't want members leaving the credit union because it's not being serviced properly. And you also want to measure member satisfaction. You don't just want to measure the financials. Then you have to invest in innovation, the technology. Make sure management is exploring new and innovative ways by which members can access financial services. That could be through AI, that could be through digital banking, mobile banking, and then also other data tools that improve service. And then finally, boards need to strengthen their own education. Boards need to be financially literate. They need to know how to read financial statements. Why? Because growth requires informed leadership. How can you govern and you don't know what you're governing? How can you measure growth, but you don't know how to read a financial statement? So you have to make board financial literacy and technology a training priority. Now, as we close, let's recap. Credit union boards are not just governing finances, but they're shaping futures. They're shaping the lives of its members. They're shaping the communities their members live in. And they have a mission. And every decision a board makes affects a member's ability to save, borrow, and build a better life, whether that is to finance a dependent child's education, buy a home. These are the things that credit unions can partner with members to make sure they achieve their dreams. So, yes, growth matters, but only when it's rooted in member value. And I think we're going to end it right there. So, thank you for tuning in to another episode of Boardroom Minutes. And we were talking about the board's role in credit union growth, and it's not what you think. So, again, if you haven't hit that like button as of yet, why don't you like this episode? Also, become a subscriber and hit that subscribe button as we try to bring you uh, clear, concise insights into the issues that shape today's boardrooms at for profit corporations, nonprofit organizations, and religious institutions like churches. I hope this episode of Boardroom Minutes was beneficial to you, and we hope to bring another episode on next week. This is Mark S. Brantley signing off, Boardroom Minutes. Take care.